Huawei Technologies, a Chinese multinational technology company providing telecommunication equipment and sells consumer electronics including smartphones. The company has been in existence for the past 32 years, providing operational and consulting services, equipment, enterprises and manufacturing communication devices for consumer markets. And as of 2017, the company had over 170,000 employees deploying its products and services in more than 170 countries. Huawei stands as the largest telecommunication equipment manufacturer worldwide and the second largest manufacturer of smartphones worldwide. Come 2018, Huawei's net income stood at $8.7 billion with total assets worth $97.1 billion. Now, on the 21st of May 2019, just the day before yesterday, U.S. President Donald Trump made an executive order that restricted Huawei to do business with any U.S. company without a government approval. And this comes amidst the U.S.-China trade war. As I stand here, Google has revoked its license, Vodafone suspended their pre-order for the Huawei 5G smartphone, and Panasonic in Japan is also a bit wishy-washy when it comes to business with Huawei, and the list of the misfortunes goes on and on. So, is this really all about Huawei? What's the big picture here? Is there more than meets the eye? We get to find out in just a bit. Good evening. Welcome to Markets Today. My name is Nina Shaban, and we start off with taking a look at the closing numbers at the Nairobi Securities Exchange. As compared to yesterday's closing numbers, where all the indices were on a decline, today's NSE 20 share index saw a rise of 0.5 points, closing at 2,641.02 points. The NSE 25 share index remained at a drop of 4.13 points, closing at 3,542.64 points. And lastly, the NSE All Share Index rose by 0.14 points and resting at 145.83 points. The number of shares traded today are 20,679,500, different from yesterday's 28,993,600 shares. Now, I'd like us to quickly take a look at the gainers at today's closing bell. Well, the largest gainer or the topmost gainer is Home Africa Limited, gaining by 9.23%. Flame Tree Group Holdings Limited, that's a rise of 8.37%. East Africa Cables Limited saw a rise of 8.33%. Chumi Supermarket Limited saw a rise of 7.5%. And British America Tobacco Kenya Limited saw a rise of 4.94%. Moving on swiftly, let's take a look at the losers at today's closing bell. Starting off with the topmost loser, which is Mumias Sugar Company Limited, that saw a drop of 10%. Total Kenya Limited saw a drop of 2.52%. And IC Bank Limited saw a drop of 2.46%. Eveready East Africa Limited saw a drop of 2.02%, and finally the Housing Finance Group Limited saw a drop of 1.87%. And for the movers, those who made vast trading, topmost mover being the Kenya Electricity Generating Company, the traded shares worth 9,569,300, followed by the WPP Scan Group Limited that made a traded shares worth 5,014,700. The Kenya Power Light and Lightning Limited traded shares worth 1,505,600. KCB, that's the Kenya Commercial Bank Limited, traded shares worth 1,493,900. And finally, Safaricom Limited traded shares worth 640,200. Now, moving on to the news that are making headlines this day. The Federation of Kenya Employer has today restated that it will not support the imposition of the proposed 1.5% housing levy on both employers and employees to fund the affordable housing project. FKA Executive Director Jacqueline Mugo has said the FKA maintains that the imposition of the levy is illegal and would infringe the right of employees. She has further called on the government to engage relevant stakeholders in a dialogue on possible alternative financing models for the affordable housing agenda. She said this on the sidelines of the 60th anniversary celebration of the Federation of Kenya Employers here in Nairobi. Just to shed more light on today's main topic, Chinese telecom giant Huawei says it could roll out its own operating system for smartphones and laptops in China by the autumn after the United States blacklisted the company, a report said on Thursday. Now, the international version of the system could be ready in the first or second quarter of 2020, said Richard Yu, the head of Huawei's consumer business, told the U.S. channel CNBC. The company was dealt a blow this week with Google's decision to partially cut off Huawei devices from its Android OS following a U.S. order banning the sale or transfer of American technology to the firm. Today, Huawei, we are still committed to Microsoft Windows and Google Android, Richard Yu said, the head of Huawei's consumer business, told CNBC. But if we cannot use that Huawei, we'll prepare the plan B, which is to use our own OS. The Global Times, a Chinese state-run daily, reported on Monday that the platform named Hongmeng was undergoing trials and will gradually replace the Android system. We don't want to do this, but we will be forced to do that because of the US government. I think the US, this kind of thing will also not only be bad news for us, but also bad news for the US companies because we support US business, Yu told CNBC. He continued, we don't want to do this, but we have no other solution, no other choice. The US Commerce Department, which added Huawei and 68 of its affiliates to an entity list last week on Monday, announced a 90-day reprieve, allowing some services to continue. All right, now staying on the U.S. And Huawei saga, China's foreign minister has slammed U.S. moves against telecom giant Huawei as economic bullying, quote unquote, and warned that Beijing was ready to fight to the very end in its trade war with Washington. The trade spat between the world's top two economies escalated after President Donald Trump issued orders on grounds of national security last week that have prompted several foreign firms to distance themselves from Huawei. Now, the U.S. use of state power to arbitrarily exert pressure on a private Chinese company like Huawei is typical economic bullying. That's what the Foreign Minister Wang Yi said on Wednesday at a meeting in Kyrgyzstan of the Shanghai Cooperation Organization, a regional security group led by Beijing and Moscow. Trump's move effectively banned U.S. companies from supplying Huawei and affiliates with critical critical components of activities the U.S. says are contrary its national security or foreign policy interests. Some people in the United States do not want China to enjoy the legitimate right to develop and seek to impede its development process, Wang said, according to a foreign ministry statement issued last Wednesday. This extremely presumptuous and egocentric American approach is not able to gain the approval and support of the international community. The two countries have yet to set a date to commence trade negotiations after they resumed the tariffs battle earlier this month, with Trump raising punitive duties on the $200 billion in Chinese goods and Beijing hiking those on $60 billion in American products. Trump has accused China of reneging on its commitments in the trade negotiations. Beijing has countered that any deal needs to be balanced. It is impossible for U.S. to sign or recognize an agreement that is unequal, Wang said. If the United States is willing to negotiate on an equal footing, then on the Chinese side, the door is wide open. But if the United States opts for a policy of maximum pressure, then China will take them on and fight to the end, he said. All right, it's a trending topic, so allow me to carry on. Japan's Panasonic has said it would stop supplying some components to Huawei, joining a growing list of firms distancing themselves from the Chinese telecoms giant after a U.S. ban over security concerns. Japan's Toshiba also announced it was temporarily halting shipments to Huawei to check whether U.S.-made parts were involved in order to comply with Washington's new restrictions. The move came a day after major Japanese and British mobile carriers said they will delay releasing new Huawei handsets, upping the pressure on the world's second-largest smartphone manufacturer. We've stopped all business transactions with Huawei and its 68 group companies that are subject to the U.S. government ban, Panasonic spokesman Joe Flynn told AFP. Panasonic's business with Huawei includes the supply of electronic parts, he said, declining to provide further details. Washington's restrictions affect products made fully or partially in the United States, where Panasonic manufactures some of the components it supplies to Huawei, the Japanese firm said. There was no immediate comment from Huawei on the move, and a Panasonic official declined to comment on what business the Japanese firm would continue to do with this Chinese company. Toshiba, meanwhile, said it had temporarily halted shipments to Huawei while it checks if they include U.S.-made parts. We will resume shipment if we confirm our products don't use American-made parts, spokesman Takashi Ebina told AFP. And on Wednesday, mobile carriers in Japan and Britain said they were delaying release of Huawei handsets. All right, turning to the markets now. Asian equities tumbled on Thursday as China-US trade frictions continue to dog investors, while the pound hit a fresh 4-month low on Brexit worries and energy firms were battered by plunging oil prices. Markets across the region were in the red as traders ran to the hills with no signs of a break in the tariffs, a standoff between the world's top two economies keeping optimism in check. The heavy selling comes after a relatively sedate couple of days in Asia and follows losses on Wall Street, with warnings that more volatility is expected for some time. Tensions between China and the U.S. have increased after Donald Trump banned telecoms giant Huawei from the U.S. market and prevented American firms from selling to it. The move has led a number of companies around the world to cut back their business with the firm, including Google, Japan's Panasonic, and BT in Britain, among others. The row, which has seen the trade war widen to also become a battle of technology has hammered the sector, with major firms seeing their valuations tumble in recent weeks. On Thursday, Hong Kong market heavyweight Tencent divided more than 2%. Sony shared more than 3% in Tokyo. Seoul-listed LG Display dived by a similar amount, and TSMC shared almost 3% in Taipei. Hong Kong was among the worst performers, with the Hang Seng Index diving 1.4%, Shanghai 1.1% lower, and Tokyo down 0.8% at launch. Taipei was more than 1% off, while Seoul shed 0.6% and Manila fell 0.4%. Still, many observers remain hopeful of an eventual China-US trade agreement. Forex traders were offloading the pound as Prime Minister Theresa May faces being ousted after her revised plan to push through her Brexit agreement faced a barrage of criticism and making it unlikely to be passed by MPs. Her political career appeared to be in tatters after Wanjara, one of the cabinet's strongest Brexit backers, resigned over May's handling of the crisis, while members of her Conservative Party are said to be planning ways to force a no-confidence vote in the Premier. With May expected to be gone even before June, there are many concerns she will be replaced by a hardline Brexiter, making it increasingly likely Britain will leave the EU without a deal. Energy companies were taking a hit after oil prices tanked on news of another sharp rise in the US inventories, which added to worries about demand. Both main contracts plunged on Wednesday and extended losses in Asia on the surprise increase, with downward pressure also coming from concerns about the impact of the trade war on the global economy. Europe's major stock markets fell in initial trading on Thursday after losses elsewhere as voting kicked off in the European Parliament elections. Investor sentiment remains dogged by frictions over the festering China-US trade war, dealers said. In opening deals, London's benchmark FTSE 100 index of leading blue-chip companies was down 0.5% at 7,297.67 points. In the Eurozone, Frankfurt's DAX 30 slid almost 0.9% to 12,064.29 points, while the Paris CAC 40 sank 0.8% to 5,335.12 compared with Wednesday's closing levels. On Thursday, Britain and the Netherlands kicked off 4 days of voting across the continent in a contest in which rising populist forces are hoping to make significant gains, threatening closer to EU interrogation. Asian equities, meanwhile, tumbled on Thursday after losses on Wall Street on the back of the raging trade war between the world's two biggest economies. Tensions between China and the US have increased after President Donald Trump banned Chinese telecoms giant Huawei from the US market and prevented American firms from selling to it. The move has led a number of companies around the world to cut back their business with the firm, including Google, Japan's Panasonic, and BT in Britain, among others. All right, now the Kenyan shilling was seen under pressure on Thursday due to merchandise and oil importers buying dollars to meet their end-month obligations, traders have said. According to Reuters, commercial banks quoted the shilling at 101.20 buying, 101.40 selling per dollar, compared to 101.15 buying and 101.35 selling at Wednesday's close. Here's a look at the day's indicative exchange rates for selected currencies.